This is Dr. Sridhar, Assistant Professor of Commerce, Government City College, Hyderabad. Today we'll look at the topic Bank Reconciliation Statement Part 2. In the first part, we have discussed about what is Bank Reconciliation Statement, what is the need for preparing the Bank Reconciliation Statement, and what are the various reasons for the differences between the balances as shown by the cash book and passbook. Today we will try to look into the practical part of the bank reconciliation statement, that is the preparation of bank reconciliation statement. As we know that there are different reasons for which there is a difference between the balances as shown by the passbook and the cash book on a particular date, and how to identify the various reasons and how to prepare or how to reconcile the bank statement. We'll have a look on by taking an illustration. Here the first illustration 1. From the following particulars of Mr. Vinod, prepare bank reconciliation statement as on March 31st, 2014. There are different points which are the information that is given to us. The first one, bank balance as per the cash book rupees 50,000. Number 2, checks issued but not presented for payment rupees 6,000. The bank had directly collected dividend of rupees 8,000 and credited to bank account but was not recorded in the cash book. Bank charges of rupees 400 were not entered in the cash book. A check for rupees 6,000 was deposited but not collected by the bank. So this is the information that is provided to us, and based on the information available, we need to prepare a bank reconciliation statement of Vinod as on 31st March 2014. Here, before we prepare the bank reconciliation statement, we need to identify we need to analyze each transaction, what is that happened, the event, and what is we have recorded in the cash book and what is that recorded in the passbook. So we need to cross check with the entries that are made in the cash book and passbook, and accordingly we need to prepare the bank reconciliation statement. The pro forma of a bank reconciliation statement typically looks like we have a particulars column and we got two amount column, that is one for adding the amount and one for the deducting the amount. And here the bank balance as per the cash book is given, and here it is the favorable balance, that is the balance in hand, that is cash in hand as per the cash book that is shown, that is 50,000 rupees. So the starting point here will be the balance as per the cash book 50,000, and we'll be preparing a statement which will end with identifying the balance as per the opposite book, that is passbook. Here we'll try to look at the first one. Checks issued but not presented for payment rupees 6,000. Here, whenever we are issuing the checks, we record on the credit side of the cash book, that is we reduce the balance as soon as the checks are issued. But as these checks are not presented on the date on which we are preparing the bank reconciliation statement, the amount is not deducted in the cash book passbook, whereas we have deducted in the cash book. And here, as we have started with the balance as per the cash book, what is that not done in the passbook need to be taken into account. Here the passbook, in the passbook the amount is still plus, that is it is not deducted. So this amount to be added to the cash balance as per the cash book, that is a bank balance as per the cash book, that is we add checks issued but not presented for payment to the amount. And the next one is the bank had directly collected dividend of rupees 8,000 and credited to the bank account but not entered into the cash book. Here the banker has collected rupees 8,000 as dividend and credited into our bank account. That means they have added the amount in the bank account, whereas the entry is not recorded in the cash book. As it is added, as it is created in the passbook, Here we need to add this 8,000, that is dividend collected by the bank. 8,000 need to be added. The next one is bank charges of rupees 400 were not entered in the cash book. As we know that the bank charges certain amount for providing the services, and here whenever the bank charges are charged by the banker, they are debited in the passbook. That means they are deducted from the cash book. So here the 400 rupees which were deducted will be put in the, we need to place it in the minus column. The next one is a check for rupees 6,000 was deposited but not collected by the bank. When the checks are deposited into the bank, we debit the cash book. That means we increase the balance. But on the date of preparation of bank reconciliation statement, the banker has not yet collected the amount and deposited into our account. That is, the credit is not done in the passbook. So it is still in the minus. So cash book is added, whereas the passbook they did not add. That is the reason we have placed 6,000 rupees in the minus column. That is the checks deposited but not collected by the bank. And here, after taking into account all the items, that is from 1 to 5, we need to total the plus column, the highest column. The total of the plus column is 64,000 rupees. The same amount to be placed on the minus column, and we need to balance the minus column here. That is, already the amounts available are 6,000 plus 400. 6,400 minus 64,000 comes to 57,600. This is a balancing figure which we call it as a bank balance as per passbook. So this is how we need to prepare the bank reconciliation statement. Next, we'll try to look at the another illustration of preparing the bank reconciliation statement. Here, illustration number 2. From the following particulars of Anil and Company, prepare bank reconciliation statement as on August 31st, 2014. Here we are supposed to prepare a bank reconciliation statement of Anil and Company on August 31st, 2014. And whenever we are preparing the bank reconciliation statement, we need to focus on the date on which we are supposed to prepare the statement. The information provided to us are that is balance as per the cash book rupees 54,000, rupees 100 bank incidental charges debited to Anil and Company account which is not recorded in cash book. Check for rupees 5,400 is deposited in the bank but not yet collected by the bank. A check for rupees 20,000 is issued by Anil and Company and not presented for payment. Here we are given with the 4 items, and as we know that the title should be bank reconciliation statement of company for which or the firm for which we are preparing. Here in this case it is Anil and Company, and the date on which we are supposed to prepare is to be written as on August 31st, 2014. And as the balance is given as per the cash book, we will begin the preparation of statement with the balance as per the cash book, that is 54,000. Place it in the plus column as it is a favorable balance. If it is an unfavorable balance, we need to record separately. Here the first one, rupees 100 bank incidental charges debited to Anil and Company account, which is not recorded in the cash book. Here the banker has charged 100 rupees as incidental charges and debited to the Anil and Company account. And debited to Anil and Company account in the sense these are deducted from the balance in the passbook. So in the passbook it is deducted. So there is a deduction, there is a negative balance, that is amount is deducted in the passbook, but whereas it is not recorded in the cash book, that is still it is plus, the amount is not yet deducted here. So here as we have begun with the balance as per the cash book, we need to take as per the passbook. So what is done in the passbook? It is deducted. So we record in the minus column as bank incidental charges debited by the bank 100 rupees. Then the next one is checks for rupees 5400 is deposited in the bank but not yet collected by the banker. Here 5400 rupees worth checks were deposited in the bank. As soon as we deposit the check, we record on the debit side of the cash book, that is we increase the amount, and the amount will be increased by the banker only when it is collected by the banker. And as per the information given here, the banker has not yet collected it and credited to the bank, so the amount is not added in the cash book, that is still it is minus. So we need to place the 5400 in the minus column, that is checks deposited but not credited by the bank. We need to place it on the minus column. Next, a check for rupees 20,000 is issued by Anil and Company, not presented for payment. So here a check for rupees 20,000 is issued by Anil and Company, and whenever the check is issued, we record on the credit side of the cash book, showing that the balance is reduced, that is deducted from the balance. And as the check issued by Anil and Company is not presented to the banker did not deduct the amount. So in the cash book 20,000 rupees is deducted, but in the passbook it is not deducted, that is it is still plus. So we take it in the plus column, that is checks issued but not presented for payment 20,000 rupees. So this is how the treatment is to be made. Here we need to keep it in mind that when we are preparing the bank reconciliation statement, we need to analyze each transaction that in the two ways, that is what is that we have done in the cash book and what is that not done in the passbook, and vice versa. And accordingly the amount to be placed either in the plus amount column or minus amount column accordingly. And here after doing so, the plus amount column amounts to 74,000 rupees, which is placed on the minus amount column, wherein the 5400 plus 100 comes to 5500, which will be deducted from 74,000, and the balance amount is 68,500, which will be balance as per passbook. That is, we begin with the balance as per cash book, we have begun with the balance as per the cash book, and we have arrived at the balance as per the passbook. This is how we need to prepare bank reconciliation statements. Once we know what are the different reasons for which there exists a difference between the balance as shown as per cash book and passbook, we will be able to analyze and trace out the effect of the reason, and accordingly we need to adjust the amounts so as to arrive at or reconcile the statements of both cash book and passbook. So this is how we need to prepare the bank reconciliation statement. So thank you.